Right now, Bitcoin is sitting at a critical junction point, and there are three massive catalysts that most investors are completely missing. And in this video, I'm going to break down GameStop's Bitcoin treasury strategy, Trump's new crypto national reserve, and the regulatory shifts that are about to change everything. And by the end of this video, you'll understand exactly why corporate adoption is the match that could light Bitcoin's rocket fuel and how high prices could realistically go. And you'll also understand how easy it is to remove your personal information from the internet with the sponsor of today's video, but more on that later. So if you've ever considered investing in Bitcoin or you already are holding some, this might be the most important 10 minutes of your entire life. And it starts by talking about GameStop's bold move. In case you haven't heard, GameStop's recent Bitcoin acquisition move is just the tip of the iceberg because they're joining a growing corporate revolution that's been quietly building momentum since 2020. The real pioneer was MicroStrategy, who made the first major corporate Bitcoin play when they converted 250 million of their cash reserves into Bitcoin, and that initial investment was just the beginning. They've since gone all in on the strategy in a way that's almost been hard to believe. MicroStrategy now owns over 500,000 Bitcoin, and let that sink in for a second because that's 2.4% of all Bitcoin that will ever exist, now worth more than $40 billion. And they've essentially transformed their entire business model around Bitcoin. When a company stakes its entire future on something, they clearly see value that others are missing. Now, following this groundbreaking move, Tesla ignited market interest in 2021 with their $1.5 billion Bitcoin purchase, sending shockwaves through financial markets and driving Bitcoin up 20% in a single day. Tesla even temporarily accepted Bitcoin for vehicle purchases, legitimizing cryptocurrency as a medium of exchange beyond just a store of value. And meanwhile, Square, which is now Block, made serious Bitcoin investments under Jack Dorsey's leadership, with Dorsey boldly declaring that Bitcoin is the future of money. And these corporate giants aren't merely investing, they're betting their corporate futures on a digital revolution. But you have to ask yourself the question, what's driving these major companies to trade dollars for digital gold? And it comes down to the deteriorating value of traditional currency. With the Federal Reserve dramatically expanding the money supply, corporate cash reserves silently lose 2 to 5% of purchasing power annually through inflation. So for every $100 million in treasury holdings effectively shrinks by $2 to $5 million yearly without moving a cent. But Bitcoin fundamentally reverses this dynamic because instead of an ever expanding supply, Bitcoin has a fixed cap of 21 million coins, period. And this mathematical certainty creates a scarcity fundamentally different from every other government-issued fiat currency. And for corporations, this presents a powerful inflation hedge in an uncertain monetary landscape. Now, the implications of this adoption trend are massive because currently 164 entities have integrated Bitcoin into their balance sheets instead of holding US dollars. 8 countries now actively hold Bitcoin as part of their national reserves. You've probably heard of countries like El Salvador, for example, and we're witnessing a fundamental shift in how organizations approach wealth preservation, and the corporate Bitcoin movement remains in its infancy. So if just 1% of S&P 500 companies implemented similar Bitcoin treasury strategies, hundreds of billions of dollars would flow into cryptocurrency, specifically Bitcoin, and when substantial demand meets limited supply, prices rise, potentially dramatically, and this corporate capital influx would likely create a powerful feedback loop, meaning as more companies purchase Bitcoin, available supply tightens, and this supply reduction combined with increasing demand could drive prices significantly higher and establish much higher price floors in each market cycle, as institutional investors would likely accumulate during price corrections. So what we're witnessing is a complete rethinking of corporate treasury management. That is to say, management of treasuries by companies or corporations, because for decades, the standard approach was keeping cash in safe investments like government bonds or high interest savings accounts, but with negative real interest rates and unprecedented money creation, that strategy increasingly guarantees value loss over time, and Bitcoin offers companies a hedge against inflation and currency debasement. So when MicroStrategy's stock outperformed most other tech companies after their Bitcoin purchases, it sent a powerful message to corporate boards everywhere. Bitcoin might preserve value and create substantial shareholder value in an era of monetary uncertainty. Now, we'll also talk about the US government's own Bitcoin strategic reserve in a second, but first let's talk about how you can remove your private information from online sites with the sponsor of today's video, video, delete me. Now, this is a service that I personally use, and they have removed my personal information from literally dozens of sites. Data breaches are becoming more common than ever, and that's why the sponsor of today's video, Delete Me, is more important than ever, because it helps you remove your personal information like your name, address, phone number, email, and more from data broker websites that buy, sell, and trade your data online. And the process is very simple. You simply submit your information, and within 7 days, you'll receive a report from Delete Me showing exactly where your data was found and removed. Delete Me continues to monitor and remove your data all year long, and I can tell you from personal experience, it actually works. And you can get 20% off all US plans today by heading over to the link in the description below and join the thousands of people who trust Delete Me to protect their online privacy and take control of your data today. Now, back to the video. And companies, they aren't the only ones that are rethinking their relationship with money. So you have to ask yourself the question, what would happen if the most powerful government on earth decided to back its own currency with Bitcoin instead of gold? It sounds like science fiction, but the Trump administration's recent moves suggest we might be closer to this reality than anyone realizes. On January 23rd of 2025, it marked a watershed moment that most people completely missed, because on that day, President Trump signed an executive order that fundamentally changes how our government views cryptocurrency. This executive order represents the first step towards creating something revolutionary, a national Bitcoin strategic reserve. Think about that for a second. The same government that once viewed Bitcoin with suspicion is now positioning itself to become one of its largest holders. And the executive order established a president's working group on digital asset markets and specifically directed them to evaluate a potential for a national Bitcoin reserve. And the most fascinating part, they're planning to use Bitcoin the government has already seized as the foundation. And this shift echoes the 1971 Nixon shock when the US abandoned the gold standard, which completely reimagined our financial infrastructure. And when you look at the underlying motivations, it makes perfect sense, because since 1913, the US dollar has lost over 96% of its purchasing power, which is the silent crisis driving this entire movement. You see, imagine watching your life savings slowly melt away year after year. That's essentially what's happening to our national currency. And at the same time, we're witnessing de-dollarization, with countries like China actively reducing their dependence on the US dollar. And this global shift threatens America's financial dominance and creates urgency around finding new solutions. And a national Bitcoin reserve could be exactly the strategic response needed to maintain our competitive edge in this changing landscape. And this bold move not only reshapes policy, but it also signals a seismic shift in global financial strategy. You see, Bitcoin aligns perfectly with the attributes of a successful currency and real money. It's scarce, meaning unlike dollars that can be printed endlessly, it's divisible down to tiny fractions, it's incredibly portable, it's virtually indestructible, every Bitcoin is identical, and it's accepted globally. And according to research, Bitcoin ranks highest in every currency category except for one, which is being issued by a government. But here's where things get really interesting. The actual supply of Bitcoin might be far more limited than the 21 million maximum we've always hear about, because experts estimate that between 3.9 and 4.8 million coins are already permanently lost, like diamonds sinking into the ocean depths, never to be recovered or seen ever again. That's roughly 20% of all Bitcoin that will ever exist, gone forever. So imagine what happens when the US government starts actively buying Bitcoin for its strategic reserve. We'd see a massive new demand entering a market with an already restricted supply. Prices would likely surge to levels that make today's all-time highs look tiny by comparison. And the executive order makes it clear that the administration views this as part of a broader effort to establish the US as the crypto capital of the world. They're reviewing existing regulations that might be hindering the crypto industry and potentially rescinding the unfavorable policies that have held it back. So when a world superpower treats Bitcoin as a strategic national asset, something worth preserving alongside gold reserves, it sends a powerful message to every institution, corporation, and individual investor that's still sitting on the sidelines. We're potentially witnessing the early stages, yes, the early stages of a historic transition in how nations think about reserves. For centuries, countries backed their currencies with precious metals. Then we moved to a system where the US dollar itself became the world's reserve currency. Now, we might be entering an era where Bitcoin plays a crucial role in this global financial architecture. And if that wasn't enough of a reason to see a serious upside on the horizon, the fact that regulatory clarity is just around the corner could be the rocket fuel that sends Bitcoin to the moon. But before we talk about that, if you're enjoying this content so far, please make sure you smash that like button for the algorithm and consider subscribing to the channel if you're enjoying this content so far. It's a free way that you can support the channel and it is much appreciated. And beyond psychological shifts and government holdings lies the real game changer for Bitcoin, and that's regulatory clarity. So for years, the invisible wall preventing Bitcoin from reaching its full potential hasn't been technology limitations or lack of interest. It's been the chaotic regulatory environment that's forced crypto companies to operate within a constant sword hanging over their heads. Imagine trying to build a business where the rules could completely change overnight. I guess that is kind of like building a business, but where you could invest millions developing a product only to have a regulator declare your entire business model illegal the very next day. And that's been the reality for cryptocurrency companies in America for the past decade. And this regulatory roulette has kept trillion-dollar financial institutions and mainstream investors from fully embracing the space, even for established cryptocurrencies like Bitcoin. The Trump administration is now dismantling this regulatory uncertainty piece by piece, and we're seeing a complete reversal of the previous administration's approach. Instead of a regulation by enforcement strategy that left companies guessing about the rules, the new administration is creating actual frameworks that support innovation while also protecting consumers. And at the center of this transformation is David Sachs, the newly appointed crypto and AI czar. Sachs will directly advise the president on crypto matters and also chair the president's working group on digital asset markets. And as a longtime supporter of the crypto industry, he's positioned to advocate for growth-oriented policies, and his group has a 180-day deadline to propose a comprehensive federal regulatory framework evaluating everything from stablecoins to that national Bitcoin reserve we discussed earlier. Think of these regulatory changes as turning a chaotic dirt road into a well-marked highway for institutional investors. So you have to ask yourself the question, what will happen when the rules are suddenly clearly defined and the institutional money starts pouring in? You see, even though you're late to the game if you just now start buying Bitcoin, the real truth is you might be amazingly early. Now, the SEC, which was previously seen as the biggest roadblock to crypto innovation, is getting a complete overhaul of its approach as well, because the SEC has established a Crypto 2.0 task force led by Commissioner Hester Pierce to address previous enforcement actions criticized for their novel and untested legal interpretations. And what makes this significant is the collaborative approach versus a combative approach that was experienced with the prior administration. You see, this task force will work with other federal agencies, state regulators, and international partners to create a predictable environment for investors. And they've even been seeking input from actual stakeholders in the industry, which is a refreshing change from the previous approach. Imagine if your bank could hold your Bitcoin with the same ease as cash. What would that unlock for you? The fact is, this could soon be the reality as federal banking regulators revisit policies to provide clearer frameworks for banks to engage with crypto. This means traditional financial institutions could offer custodial services for Bitcoin without fear of regulatory backlash. And when major investment firms can offer Bitcoin products to their millions of clients without regulatory concerns, billions in institutional capital currently sitting on the sidelines will start to enter the market. Now, this doesn't mean a crypto free-for-all with no rules. Anti-money laundering laws will still apply, and state regulations like New York's BIT license aren't disappearing. A state attorney general, for example, can still bring enforcement actions against bad actors, but the overall direction supports rather than restricts the industry. And this regulatory shift creates a transformed investment landscape for Bitcoin. When companies know that they won't be punished tomorrow for following today's rules, they can incorporate Bitcoin into their long-term strategies, and the uncertainty discount, the risk premium that investors require because of regulatory chaos, begins to fade. And what's happening is we're witnessing the removal of the final major barrier to widespread Bitcoin adoption, creating a perfect storm where corporate treasury adoption, government validation, and supportive regulation converge to propel Bitcoin into mainstream finance and potentially the stratosphere. So what happens when we combine all these major developments? We're witnessing a perfect storm that may fundamentally redefine Bitcoin's position in the global financial system. And history teaches us valuable lessons here. You see, when gold ETFs gained institutional adoption, we saw similar price movements that could pale in comparison to Bitcoin's potential trajectory. And with only 21 million coins ever possible, the supply squeeze from these converging forces could be unprecedented. Corporate treasuries, government reserves, and clear regulations function as interconnected catalysts, transforming Bitcoin from speculation into a cornerstone asset class.